Good morning, good morning, good morning. It is Thursday. I nearly said Tuesday. It is Thursday, the 2nd of April, all day. This is the morning blast for myself, Ryan, and obviously Mr. Michael Brown, who I was fortunate enough to see yesterday out in the wild outside of the Jam Pot, looking very ravishing as always. For those of you, well, I'm guessing everyone does know by now, this is the morning blast. This is a very candid take on what's going on in markets. Not apologize for any vulgar language or tangents that we may go down. Nothing we say is trading or investment advice. Is there any other warnings I need to give Mr. Michael Brown?
No, I think that's everything. Very good morning to you, Ryan. Good morning, everyone. Happy synthetic Friday, although it kind of was a synthetic Friday for me yesterday. Happy Easter as well to all of those observing. And we've almost made it to the end of, well, it's been a holiday shortened week, but it certainly hasn't been short of excitement or choppy trading conditions.
It really hasn't. And also, bonus, I found out today via you this morning that I've also got Monday off.
Yes, listeners, just to give you an idea of how the degree to which your hosts have their finger on the pulse, one of us, and I won't name any names, Ryan Paisley, didn't realise that the UK celebrates Easter Monday. So, yeah, we can just about do markets. If you ask us to do, days of the week or anything more complicated than that, we might struggle. Letters of the alphabet, counting to 10. Go somewhere else.
Yeah. Hi, Claude. What year is this? Look, that happened once, and once I had to ask Claude how old I was, but we will move on swiftly.
Yeah, if anyone's wondering why NVIDIA GPUs are so expensive, it's because Ryan's asking stupid questions of AI models.
Mate, there's no such thing as a stupid well, maybe. Speaking of stupid questions and also age, Clive Lambert, our dear friend Clive Lambert from Futures Techs. Just get an update from him on what markets are doing and also levels to keep an eye on before we crack into the day and the morning blast. The S&P saw green yet again yesterday, but is well offered overnight back to 65.20. More on that later. And obviously 65.20 as Clive went to print. God knows what it is by the time you listen to this. Back below that 65.94 level that we've been watching of late. Nasdaq didn't sustain a move above 24,255 yesterday and is offered overnight again. Basically same all equities. We know the score by now. DAX posted a piercing pattern on Monday and followed this with two green candles to post close above 23,350 yesterday.
We still have no idea what a piercing pattern actually is. We're just saying it because it sounds nice.
I'll be honest, I'm slightly nervous to find out.
Not something I'm going to Google on a work laptop, I can tell you that.
Right. FTSE, again, following the theme, failed at 10,445, more or less the tick overnight, then pulled back to 10,266 as Clive went to print. Funds, they also hit a Fibonacci retrace level at 126.26 level yesterday to the tick, and it's been sold off to 125.19. Ditto T-notes highlighted Fibonacci resistance at 111.14 yesterday. High was 111.14.5. And now we're back eyeing the Marubozu support of 110.15. So Fibonacci's work occasionally. Clive's getting a bit more aggressive on that, but I'm not going he actually swore in his morning update. Believe that. The Eurodollar, yeah, exactly. Eurodollar and cable both posted green candles yesterday, but have given back overnight. Gold, the yellow metal, got up to 4,821 yesterday, 4,826.
Oh, we're being told off by Uncle Albert now. He's telling us to just read it out.
But this is the thing, he could write anything and I'd read it out. 48.26 overnight before selling off to 45.80. Sorry, that's in gold, where a hammer on the 30-minute chart hints that we should be buying this dip, apparently. I'm being called a knob jockey, apparently. By Clive Lambert. Silver fell just shy of trend retest and has pulled back to 69.66. Do love the 69 big figure overnight, where we found some buyers despite this. Well, this was basically bulls. Obviously, would prefer the 70 handle. We'll see what happens there. LME copper has resistance around 12,465 to 12,500. Need to see off that before we can think bullish thoughts again. In oil space, Brent crude sold off to 98.35 yesterday, but spiked higher overnight, obviously on the news, which we'll come to in a second. Got up to $108.35 as Clive went to print. above here, we got 109.99 and 112.12 and 119.50 as the levels to note on the upside. WTI back at Tuesday's 106.86 high. Failure after overnight rally. 113.41 is the target above here. Gas oil, that's retaken the gap resistance at 12.82 to gun for 14.15 and 50 cents. 14.22 and 50 cents again on the upside. What else we got? TTF saw weakness from $50, the big figure, down to 46.75 and a half yesterday, but gapped up this morning. $50 is the gap support, so we'll see if that holds. If it doesn't, we'll likely see another red candle. So if it comes off, we'll see a red candle. If it goes up, we'll see a green candle. Thanks for that, Clive. European carbon market.
He is an expert in what he does, isn't he?
European carbon markets that hit 75, 74 level that we've been highlighting for a while. And we'll see if any sellers return for now. Thank you very much, Clive Lambert.
Very good. Thank you, Clive. The technical update today being markets could go up, markets could go down. The fundamental update this morning will be war could end or war could carry on. And that's the end of the show.
Not far off.
We are striking a bit of a risk-averse tone this morning, that as well, I think Clive alluded to when we got through the bulk of that. And the reason for that really is on the back of the national address that President Trump gave overnight, about 2:00 this morning, London time. It was more a case of what Trump didn't say than what he did say that I think is resulting in sentiment being a little bit sour as the day gets underway. Just to recap some of his comments, it was a bit rambling, as you might expect. It was almost as if someone had kind of mashed together some of his Truth Social posts and put them into a speech that he then read out for 15 minutes or so.
So on this, I didn't realise, and this is because he obviously says so much by Truth Social and all of these, whilst he's walking to the helicopter and whatnot. This is actually his first national address since the start of the war.
Yes, exactly. It's the first time he's done one of these since December, I believe, and I don't actually know what that one was about. And I think that's actually the reason why he did it, not to provide any new information, but actually because it's kind of the first, if not the only opportunity to really sort of frame things for what's going on for Joe Public, right? I mean, you and I and all of our listeners, because we're involved in financial markets, we are literally hanging on every word that President Trump says. Your average American, and this goes for any country, your kind of average citizen is not going, oh, President Trump's about to get in a helicopter, let me turn the news on and see what he says.
Yeah.
So the way that the administration can frame it is by doing one of these kind of set piece keynote addresses, because if you go, there's an address to the nation from the president, it's on every channel, it's at 9:00 primetime TV, you can't avoid it effectively. And I think that's why they did it.
Yeah.
Having said So I think also in light of that, it makes some degree of sense why there wasn't really any meat on the bones in terms of what he was saying. We had all the usual stuff around, Iran being destroyed, the Navy being obliterated, et cetera, et cetera. Trump was saying that they are nearing the completion of their strategic objectives, which he outlined once again, that they must complete the mission in Iran. Sorry, there is no war with Japan. Don't worry. I'm slightly hungover this morning, which explains that little slip of the tongue. They must complete the mission in Iran. They are on track to do so, quote, very, very shortly. But then Trump also said that they will hit Iran, quote, very hard over the next 2 to 3 weeks. So I think obviously you look at the context in terms of what markets have been doing this week. We've had a couple of relatively optimistic days, actually, on Tuesday and on Wednesday, as we kind of had hopes building up that this may be coming to an end sooner rather than later. There was increasing indications that Trump might be kind of planning to just sort of up sticks and walk away no matter what goes on with Hormuz. The fact that Trump didn't kind of lean in to any of that in the address overnight has seen a little bit of that optimism unwind. And it's kind of that classic risk-off playbook that markets have been reaching for quite a lot recently. Crude notably higher, Brent and WTI up about 6% apiece. And that's just putting pressure on everything else. European stocks down 2, US stocks down 1, government bond yields moving higher across the board. And in the FX space, pretty much everything's selling off apart from the dollar. I think the other thing just to bear in mind around the price action that we see this morning is it is essentially Friday. Friday. And as Ryan has now found out, it is a 4-day weekend coming up. And, we've already seen a very, very distinct pattern throughout the conflict. Brent crude has not traded lower on any Friday since this started, and the S&P future has not traded higher at the close on any Friday since this started. So again, you've got that desire to just de-risk and take down positions into a 4-day weekend where goodness only knows what could be happening.
No, quite exactly that. Is we talk about headline risk, we talk about weekend risk and whatnot. A 4-day weekend. What the hell's going on here? But the thing is, well, speaking of tomorrow, obviously being a holiday both in the US and Europe, etc. And what have we got tomorrow? NF4.
Yes, we do, which we can get on to in a second. Because have you got anything else in the Middle East? There were a couple of other bits and bobs I wanted to mention from
God,
yesterday.
take it away.
Right, fine. The first thing was actually, again, President Trump. There was an article in the Telegraph saying that Trump is strongly considering pulling the United States out of NATO, apparently saying that NATO is what he called a paper tiger. Again, all the kind of usual suspects have got hysterical over this, going, it's the end of a decades-long alliance, Trump's ruining the world order, etc., etc. I mean, if you haven't woken up to the fact that this geezer just loves to escalate, to de-escalate, to negotiate things at this point, then, where have you been for the last 15 months? I think this is
Sorry, go on.
I was going to say, I think this is very much a case of Trump basically going, let me try and scare you lot into doing what I want you to do.
Spending more money as a proportion of GDP, etc., etc. Well, I'll tell you one interesting thing. Obviously, we had Keir Starmer on the wires yesterday.
Interesting and Keir Starmer together in the same sentence.
Quite. But he is using the war in the Middle East as a opportunity to realign with the EU, because apparently we need to do that now.
Yeah, I'll be honest, I haven't actually read up as much as I probably should have done on that one. But what's the link between war in the Middle East and trying to unwind Brexit?
I don't know, but yeah, we'll blame Brexit for it. I'm sure it's
It feels almost like that's kind of been the ambition for a prolonged period of time, and this is just an excuse. Yeah,
exactly. Well, obviously, I suppose it aligns Ed Miliband to being able to buy coal-fired power and whatnot, and claim that it's green and all this bollocks.
Oh, Christ. Well, he's too busy looking at windmills or whatever. But I think the NATO stuff, it's worth mentioning just because it is a significant story, but I think it's also a bit of a kind of storm in a teacup at the end of the day. I think it's very, very unlikely that would happen. And actually, I'm not going to say it's impossible, but there is a law in the United States which was passed a few years back that means pulling out of NATO requires a 2/3 majority in the Senate, which you're never going to get. Would you like to have a guess at who the sponsor of that bill was?
Donald Trump.
No, it was then Senator Marco Rubio, who is now Secretary of State running around going, NATO's useless. So, I think a classic example of views being changed for political expediency there. The other thing I did just want to mention very briefly in terms of yesterday before we crack on with a bit of a preview. Oh, we can't. Well, I was going to mention that in a second. But yeah, ADP came out 62,000 in March, pretty much unchanged from the prior of 63. That was compared to 40,000 consensus. So a bit of a beat on that one. But no, what I was going to mention was the comments we had from the Bank of England governor, Andrew Bailey, because again, he is pushing back on market pricing. Oh, God. There's no other way I can phrase that. Money markets continuing to price in about 55 basis points of tightening from the Bank of England by the end of the year, which, as we've said on a few occasions, is somewhat nonsensical. Governor Bailey yesterday being as explicit as a central banker kind of ever is on these matters, saying that, in his words, he thinks markets are getting ahead of themselves in pricing in rate hikes. Now, the timing of that perhaps not ideal, given that it came lunchtime yesterday and we've seen oil prices move 7 or 8% higher since he spoke. However, I think it's interesting that the bank are trying to push back on market expectations to this degree. It suggests that they are likely to adopt a considerably more dovish approach than the one that markets currently price. And his message has fallen on deaf ears a little bit. I think it's kind of hard for markets to price out the tightening that's now in the curve when crude is going through the roof again. But I do think that, the fact that Bailey has now spoken, well, I think it's 3 times in the aftermath of the decision that we had on the 19th of March, it's quite rare for a central banker to do that if they're not really, really trying to hammer home a particular message. So very much one that we do need to take notice of.
No, absolutely. And the thing is, as we've said multiple times over the last week or so, the market pricing, it just seems ridiculous. And there's more at play than people actually pricing in hikes. There's obviously a lot of market dynamics where people are being squeezed out, etc. But yeah, it just getting on the other side of that trade seems an obvious one for me, which is probably why it's going to end in tears.
Yeah, I mean, I fully agree with you, which is another reason why it will end in tears. The other issue is I did say, markets are getting a bit overexcitable when they started pricing like one hike, let alone when they ended up going to the extreme of pricing 4 by the end of the year. So, maybe take our views with a bit of a pinch of salt. But I very much think that the market has gone far too fast. And I think the big man is spot on there.
Exactly that. I completely agree. I know, obviously, today/tomorrow, obviously, we're not going to be doing a show tomorrow, but NFP tomorrow, any views?
Yeah, indeed. Well, I mean, first things first, I think the market moves that we've seen this morning are probably likely to continue, barring any geopolitical headlines. I think it's a case of, kind of standard Friday rules apply now of no one's going to try and catch a falling knife. As for payrolls, I think my sort of overriding view, and I'm sort of taking my vested interest hat off here, is do not fucking trade it.
Yeah.
NFP is a bit of a nightmare at the best of times. It's one of those where, as we say very often, we could have the data right now and probably still lose money trying to trade it. That stands even more the case when the payrolls report is dropping on Good Friday. That means that the vast majority of market participants are not going to be at their desks. Volumes are going to be very, very low. Liquidity is going to be very, very thin. Quite frankly, the markets that are open, and I'm talking FX, equity futures and rate futures, because they're the only things that are trading tomorrow, they could realistically go absolutely fucking anywhere on the back of the payrolls print, because liquidity is going to be utterly awful. So even if you get a really strong number, the market reaction to that could be completely inexplicable and potentially quite violent. It's, just why do that to yourself? It's Good Friday. Go down the pub, go and have a roasted lamb somewhere, go and enjoy yourself rather than worrying about what markets are going to do on the back of the jobs numbers.
Even if markets were open, we would be sitting here saying, do you know what? Probably wise to ignore the number, wise to stay clear of trading it because of what's going on with headline risk. If markets were open, we'd be saying that.
Yes, exactly that.
Markets aren't open, so do not trade it at all.
Indeed. Having said that, is just in the interest of good order, I will tell you that headline payrolls are seen having risen by 65,000 in March, with earnings at 3.7% on the year and unemployment set to hold steady at 4.4%. The other thing to bear in mind on this front is it's, again, tough to imagine, setting aside the market reaction, is tough to imagine this having a significant impact on the FOMC. At the end of the day, they are in this kind of wait and see mode for the time being, given what's going on with energy prices, and that seems unlikely to change anytime soon. So, the implications of the report for markets could literally be anything. For the Fed, I just really don't see, no matter what the jobs number is, I don't see it shifting Powell and co out of this "we're on hold until we know what's going on geopolitically" stance that they adopted at the March meeting. So, and also just to sort of broaden that out a little bit more, although markets are going to be very thin and very illiquid on Friday and also on Monday as well, that doesn't mean that news flow is going to stop completely. So again, in terms of, we're talking about potentially an outsized reaction to the payrolls numbers and inexplicable moves, the same goes on the back of, any geopolitical headlines that might cross, and also potential for gapping risk on Sunday night as well, given the closures that we see on Friday. So plenty of moving parts. I think, again, never trading advice on this program, but as close as I'm going to get to giving it is, there is very, very little reason not to just square everything up probably this morning and then come back on Tuesday.
It does feel like the only trading advice we ever do give is don't trade.
Which actually, do you know what? And I know that sounds like a bit of a cop-out on our parts, but I would say, and we are slightly biased, that actually that advice is almost as valuable as the trades you should put on, because protecting your capital and ensuring that you can sort of come along to fight another day and be back next week is just as important as decent performance over time.
The most profitable days I've had are in the pub.
Well, there we go. Probably the same for me, actually.
Well, not yesterday, but anyway.
No, the only people making a profit out of me yesterday were the jam pot, to be honest. But
well, I don't know. You didn't buy me a beer, but there you go.
You disappeared.
Yeah, well, this is what I do, isn't it? They seek him here, they seek him there. Michael, on that note, my dear friend, thank you for everything. Listeners, as I found out this morning, it is a 4-day holiday for us. I'm delighted. So we both wish you a extended weekend break, a marvelous extended weekend break. Hopefully you've had a good week. Hopefully we've had a bit of value and put a smile on your face, and we'll see you all on Tuesday.
Indeed we will.